So you're about to sit down for Thanksgiving dinner. Turkey, stuffing, and that one family member who's been waiting 11 months to say, "So how's that Bitcoin thing going? When are you gonna sell? Is it a good time to buy?" Or you might be faced with the most annoying question of all. Is it over for Bitcoin? Let's be honest, we all love our families, and we also kind of want to flip the table when one of them repeats a negative Bitcoin headline that they heard on CNBC at 6 a.m. while microwaving their coffee.
Ew.
So today, I want to make you absolutely trigger-proof this Thanksgiving. We're gonna break down exactly how to answer the most uncomfortable question of the holiday season: why is the price down? And we're gonna upgrade that into a much more important question, which is, why does that even matter? Followed by the Thanksgiving classic, Uncle Bob, you don't even own Bitcoin. Because the real signals your family probably doesn't see, the ones that actually determine where Bitcoin is going, are screaming strength. And that might just mean that the bull run isn't over. In fact, it might mean that it's just getting started.
I think there's really three things that people are kind of paying attention to. The first is the United States government at some point is going to announce that they're buying Bitcoin. Creating the initial Bitcoin kind of strategic reserve and sitting the Bitcoin that we already had there was good, but that's kind of the, not the main dish. The main dish is when they start buying, and I think that will happen at some point.
The first thing you can tell your family is this: Texas just became the first state in the country set to buy Bitcoin directly. They're literally putting Bitcoin on the state of Texas's books.
Texas should acquire a strategic reserve to hedge against future uncertainty. While the state is currently blessed with a thriving economy, we must prepare for future downturns that could negatively impact tax receipts and existing state investments. Public trust in financial institutions has eroded due to a lack of transparency, but Bitcoin is a unique asset because it is fully auditable. The code is open source. The monetary policy can be independently verified by anyone using a normal computer. The Bitcoin software downloads the entire history of the ledger. Every transaction is checked to make sure that nobody is creating Bitcoin outside of the issuance schedule. And Bitcoin can only be issued through a competitive public mining process, unlike other cryptocurrencies such as Ethereum or XRP. Bitcoin is not dilutive, as there will always be fewer than 21 million Bitcoin, a finite scarcity. The average Bitcoin has been held longer than 2 years, and Bitcoin will continue to accrue long-term value. So now is the perfect time to make a strategic investment.
And look, initially, they'll be purchasing Bitcoin through BlackRock's ETFs. However, according to Texas Blockchain Council President Lee Bratcher, self-custody is the final goal. Think about that. The inflation hedge state, the energy state, the mining state, the state with the 9th largest economy in the world is now a Bitcoin-owning state. And it doesn't stop there. Check this clip out from what Bitcoin did.
If there's one thing I can just help people understand right now, 70% of all of the wealth that's ever been invested in Bitcoin, if we price every UTXO based on when it last moved, 70% has a cost basis above 85K.
That's insane.
70%. This is Bitcoin's new home. So, if you're talking about 30K and 10K and 5K Bitcoin, the truth is it's like ancient history. It just doesn't matter. There's not enough wealth down there. The wealth is all up here. Now, because we're below it, that's a lot of potential sellers on the way back up. So the bulls have got a lot of work to do to get us out of this mess. However, the rotation of this capital, think about who these new buyers are, right? These aren't retail hodlers putting in their pocket money. No one's got these kind of deep pockets. We're talking, there has to be, could be banks, could be sovereigns, could be a bit of everything. I saw the other day, I forget which Gulf state, but there's a Gulf state that bought like $500 million worth of the ETF. So sovereigns are interested in this kind of thing. And these folks feel like price insensitive buyers.
Yeah.
Where they just accumulate, they're just forever allocators. So there is going to be this rotation. Markets have got to go through this process. It'll take time to hammer out this bottom. But at the same time, these guys probably aren't. They're sailor types. They're not going to sell. So there's going to be this process of, as we hammer out a floor, wherever we find that clearing price, Bitcoin's got a really bright future ahead of it.
Let's be real. If Bitcoin were actually in trouble, institutions wouldn't be doubling down at record levels. John D'Agostino, the head of strategy at Coinbase, just presented one of the most bullish cases for Bitcoin, and not in some hypey influencer clip, not to shit on ourselves, but in a polished institutional presentation that lays out why Bitcoin is structurally stronger than ever. Check it out.
Nothing's really changed since the all-time high. If we just step back and think about structurally, in fact, you can argue the news coming out about Citibank, JP Morgan, both leveraging stablecoins at a huge scale. The Czechoslovakian National Bank has come out and announced they will be the first Eurozone country to purchase Bitcoin for the Treasury. Clarifying rules from the IRS. Harvard Endowment announcing they own more Bitcoin than gold. All of those things are structurally very, very positive. From the exchange point of view, we're not seeing a massive increase in open interest in our futures market. CME, you can check it yourself. I was always taught early on, a declining price market accompanied by a rapidly declining open interest means the market is breaking down structurally. People are exiting the market forever. When I look at Bitcoin, I see the number of active Bitcoin wallets roughly the same as it was 3 months ago. I see both CME and Coinbase futures open interest, again, ticking down a little bit, but not nearly in line with price direction. And so I go back to the very, very basic principle of if I like apples, I don't like them less because they're on sale. And so if you like this asset, you like it more. If you don't like this asset, if you've never liked this asset, you now have the microphone for a few months or a few weeks, we'll see how long, and enjoy that moment.
His message couldn't be clearer. This isn't the end. This is probably the setup. This is the moment in every cycle where smart money accumulates while everyone else feels emotional. All right, that was just the appetizer, and now here's where things get wild. Polymarket, the largest prediction market in the world, had the probability of the United States establishing a national Bitcoin reserve at exactly 0 earlier this year. But out of nowhere, that number shot up to 62%. This means millions of dollars of real money are being wagered by people betting on whether the US government will buy Bitcoin in 2027. And that money is saying yes. Talk about putting it where your mouth is, am I right? So, would this be happening if we were entering a supposed bull market? I don't know. Let me tell you what I think. I think that it could be because the state is slowly legitimizing Bitcoin through their strategic reserves, both on a local and federal level, and prediction markets, which don't care about feelings, only probability, are now saying that there's a major chance America joins Texas in buying Bitcoin. Imagine explaining that to your friends and family over the break. If they still don't buy it, just check out this clip of Michael Moe on Natalie Brunell's Coin Stories.
Basically, there's no asset class that has ever disappeared once you cross a $2 trillion market cap mark in the history of finance. So the asset class has passed the point of no return. And then Michael Saylor said famously that if this thing's not going to 0, it's going to 1 million.
Yeah, that's right.
So I'm not sure we're going to go to 1 million tomorrow. I'm pretty sure we're not going to 1 million tomorrow. But just with the institutional adoption, I mean, last year Bitcoin ETF was the most successful ETF launches in the history of financial markets. Then you have I think it's between 9 and 14 states now in the U.S. That's Wyoming just kind of went a little bit further. Texas behind it. Florida. Other states are, racing to get the Bitcoin strategic reserve into their treasury strategy. You got the federal government that, a month into their full force, and that's going to take place. And you saw that SEC just kind of settle with Coinbase, right? So the pro crypto, the pro Bitcoin movement from a federal and state level is unstoppable. And you got BlackRock and all these financial institutions coming in. And I think, Abu Dhabi just invested $400+ million in Bitcoin ETF, and every, sovereign nation states are investing to, whether it's a Bitcoin ETF or MSTR and hopefully future in Cooler as a way to allocate their assets. And I think this asset class, this $2 trillion Bitcoin asset class, has passed the point of no return.
Now, here's the perfect analytical breakdown summarized by Joao Wedson's tweet, the founder of Alphratical, one of the largest financial analytics companies in the world. He basically says every cycle people freak out because Bitcoin dips.
I saw her. There's something they're not telling us. Let's get out. Let's open the doors and get out.
But they ignore the structural reality. Bitcoin dominance keeps rising because everything else keeps dying.
It's all going to zero against Bitcoin.
Ultimately, no matter what anyone says about the price, Bitcoin is winning the long game because it has no CEO, no marketing team, no pre-mine, no insiders, no dilution, no bailouts, no off switch, and yet, every cycle it emerges stronger, absorbs more liquidity, and asserts itself as the only digital asset the world actually trusts. Inevitably, someone always asks, oh, isn't that Bitcoin thing a scam? No! Bitcoin is not crypto. They use dollars and they never question it. But if only they knew that unlike Bitcoin, fiat is also the opposite of all of those things that I just said. It's basically the most popular altcoin on earth at this point.
It's no one's IOU. It is, if you own the on-chain Bitcoin, it is not issued by anyone. It is something that organically arose between people and there's no issuer. Unlike fiat currency, where there's an issuer, every dollar is actually an IOU. Go look at the piece of paper in your wallet if you still carry physical cash. It says it's an IOU. It's paid to the order of from the Federal Reserve Bank. It is an IOU. And what's backing that IOU? It's turtles all the way down, so to speak. It's just the full faith and credit of the U.S. government. Well, what does that mean? Is that anything more than a confidence game? Is that more than the confidence game that Bitcoin or gold or real estate are? Everything is subjective. The whole concept of money is ephemeral. And once you get your hands around that, then you realize, wow, I would rather store the fruits of my labor in an honest ledger that no one can manipulate. And you pretty quickly come to hard assets like Bitcoin as being something that you want to have in your portfolio. And then you start to realize, wow, I can move Bitcoin better, faster, cheaper as a payment system, especially using a layer 2 like Lightning Network. Then you're in a whole different paradigm than the traditional banking system.
And if any of your family members are wondering where the best place to start mining Bitcoin is, you should tell them about Sazmining. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, and no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you are too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining proves it. Let's just say that if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing. Okay, Saz protects your mining, but now let's talk about protecting you. Check this out. This is my data broker report. 11 pages. 11. They know every old address I've lived at, phone numbers, family members, even what kind of car I drive. It's insane. That's why today's video is sponsored by Aura. Scammers, spammers, even stalkers can just buy your personal info and it's totally legal and so dystopian. Aura hunts down the data brokers selling your info, gets them taken down, and keeps them off automatically. You don't have to go full off-grid Bitcoin mystic and live in a Faraday cage because Aura lets you keep your modern life and your privacy. Aura has packed it all in: real-time dark web and fraud alerts, a secure VPN, antivirus password manager, 24/7 US-based support, and $5 million in identity theft insurance if anything goes wrong. No other privacy service gives you this many tools for the same price. Try it free for 14 days at aura.com/simplybitcoin. Protecting your Bitcoin in self-custody is necessary, but protecting yourself? That's non-negotiable. Go to aura.com/simplybitcoin and take your privacy back. All right, now let's get back to the show. So this is now why I'm more bullish than ever, because if that wasn't enough, here's a rapid fire rebuttal list that you can tell your friends and family this holiday. Major countries are accelerating Bitcoin mining initiatives in places like Paraguay, Norway, and Japan. It's no longer just the United States and China. Multiple sovereign wealth funds are exploring Bitcoin exposure. JP Morgan and Morgan Stanley are launching leveraged IBIT products, joining the ETF party. Who would have known after they were talking so badly about Bitcoin for all these years? I'll give you a clue. We knew. The supply of Bitcoin on exchanges continues to hit multi-year lows, which means that it's getting harder and harder to buy Bitcoin on exchanges. So sure, the price may be down, but this is what being early looks like. This is what generational wealth looks like if you have the patience. Most people don't.
You know, as I say, volatility is vitality. Bitcoin is a volatile asset. If you're going to hold the asset, you need a 4-year time horizon as minimum. A 10-year time horizon is really the right time frame. If your time horizon is less than 4 years, you should hold the credit instruments like digital credit. And if you're an equity investor in a digital equity like my company, you need that same 4 to 10-year time horizon. 4 is the short term, 10 years is the long term. I'm an officer of a publicly traded company, and what are we doing? We are in the business of buying a high energy, highly volatile asset and stripping the risk and the volatility off of it in order to sell it to people that are much more risk adverse, that are much more volatility adverse, that just want that yield. And so if Bitcoin wasn't volatile, it probably wouldn't be high performance, and then our value added wouldn't be that great, right? Like, for example, I say to people, if you knew Bitcoin was going to go up 2% a month forever with no volatility, neither you nor I would be in business, because all the conventional finance investors, all the conventional journalists, they would dominate the market. Warren Buffett would own all of it, and there wouldn't be an opportunity for us. So I look at the volatility as it's a challenge, but it's also the bug is the feature. And I say to people, you know, volatility is Satoshi's gift to the faithful. He basically gave you the ability to rise to the top of your profession as an analyst, as a journalist, as a corporate operator, as an investor. And if the volatility goes away, no one cares about your opinion on any of this. It's like, you know, you've got fire, and we've got the phrase burned. Fire burns you and electricity shocks you. And Henry Ford created an automobile, you know, with a burning engine, with a fire in the engine. And we created electronic transmissions. And so you put electricity and fire in the car, and you've got a killer consumer product. And I think the key here is you got to look at this market and say, this is indicative of energy. You can harness the energy. You can't be scared of the energy, right? There are those people that run from the fires, and then there's people that put the fire in the automobile or the jet airplane. And we kind of need the people to build the airplanes and build the automobiles if we're going to move the civilization forward.
And if you've had the patience to stick through this whole show, let's bring it home with a special message from our friends at Ledn. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want, zero penalties. And their proof of reserves, verified every 6 months, keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap it up. So now when your family asks, why is Bitcoin down? Here's your winning answer. It doesn't really matter. But if you really need to know, it's because markets move in cycles, but the fundamentals of Bitcoin have never been stronger. States are buying it, institutions are accumulating, prediction markets think the US government might be buying it, the global adoption curve is accelerating, and we're all still stacking because this is the hardest asset ever invented. The holidays, saved. Your sanity, preserved. Your conviction, strengthened. Drop a comment with the funniest Bitcoin question you've ever gotten from your family. I want to read all the good ones. That's all for now, everyone. Thanks for watching Simply Bitcoin's Satoshi. We wish you and your loved ones a happy Thanksgiving and hope you'll consider smashing the like and subscribe, turning the notifications on, and sharing this video with your friends. As always, stack, slay, and stay bullish, baby.